In this presentation, we will process payroll which includes a bonus so we can compare and contrast it to prior payrolls which do not include a bonus within QuickBooks Online. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are in the S Corporation paid payroll file. We're going to go down to the Workers tab in order to consider the bonus. The bonus is going to be for our owner, Judy Jones. Note, a bonus is often something that is considered at the end of the year by the owner of the S Corporation to see if there's any tax benefit to having a bonus at the end of the year, possibly to increase the amount that could be put into, say, a 401k plan or some type of retirement plan or any other kind of tax benefits at the end of the year. We're going to do it here in the next payroll in the first quarter to give an example and have that bonus within the first quarter so we can process the $941 within it. So we're going to select Judy Jones, our owner, and we're going to select the pencil in order to edit Judy Jones. We're going to be in item 2, so this is going to be a pay item. It's not going to be a deduction type amount. It's going to be in item 2. We'll select the pencil there, and then scrolling down, you'll see some of our items we have. We're going to say that we want a bonus for Judy. So we'll select the bonus and check that off. Then we're going to scroll down and we're going to say done and say done. And we should have added that for Judy. We're going to go back up top to the employee list. So we should be on our familiar screen now. From this screen, now we have our 3 employees. We're going to process the payroll. Once again, we're going to run the payroll. Running the payroll. We're now going to run the payroll for the month of February. So we've gone through this one time for Anthony, one time for Beth in February, January and February. Now we're going to go to February again for Judy. We've run Judy in January. We're going to run Judy Jones in February for this payroll. So we'll select that item. It's going to be that's the pay period, the month of February pay date over here. So here we have our salary pay, and you'll note now that we have this bonus field that we can now add the bonus to. We're going to add a large bonus here, 200,000. So it's going to be a large bonus, and it's going to clearly put us over the Social Security cap within the first quarter. And that's going to be one of our primary objectives. Now we'll take a look at what that does. We're going to go to the right, and we're going to look at the pencil here and see the activity for Judy's check that now has the salary as well as this bonus item. So up top, we have the salary pay, we have the bonus for the total pay. Then we have the other pay, which is that kind of strange item for the S Corporation health insurance, which is specific to an owner of an S Corporation and may apply. This is how it will be shown if applied. And then we're going to go down to the employee taxes. Selecting the employee taxes, we've got the federal income tax, the Social Security, and Medicare. And note that these taxes will, of course, be now affected by the bonus as well. So the federal income tax may have some different options to calculate for the bonus, because obviously a bonus at the end of the year, typically when it's being paid, typically at the end of the year, can distort the federal income taxes that have been taken throughout the year, which have been based on tables in order to calculate the federal income tax. So be careful when you think about the bonus, what it will do to taxes and withholdings. You may have to consider your options in terms of what the FIT, withholdings, federal income tax, should be with regard to the bonus. So we won't go into the details now. This is what's being calculated by QuickBooks here. We have then the Social Security and Medicare, and you'll note that if we go up top, the Social Security, if we were just going to take the flat rate of 241,666.67 times 0.062, it would be a lot higher than the Social Security calculation here. Why is it lower in our records here? Because they hit the cap. So they hit the cap and therefore don't pay any more Social Security. So when you're dealing with a high income earner, you got to be careful of that. That's going to happen sometime at Social Security. They'll hit the cap, and if you're not used to that, it's just going to shock you. You'll be like, what happened here? Well, what happened is they hit the cap on the Social Security and don't pay any Social Security above that point. On the employer taxes side, the same is the case. We're matching there, so the employer doesn't pay any taxes, which is great for the employer above that point in time as well. So it's great for the employee and the employer at that time. that no more Social Security is being taken out. And again, we won't go into the rationale of why that should be or why the income goes up and we pay lower taxes, but the main point of it, the main rationale would be that it's not going into any benefits that would be getting on retirement. In other words, if you're going to get the benefit of Social Security benefits at retirement, over a certain amount, a certain cap, there's no benefit to putting more money into the Social Security. And so if you think about it that way, as a retirement plan, like we're putting money in, and in some way the government's going to give it back in some way in the future, then that would be some kind of justification to have a cap. If you think of it more of a welfare plan that we're putting money in for needy people to take it out and it's not a retirement plan for everybody, then maybe that would be less justification for a cap. And so anyways, that's the policy, or why the policy might be. In the application of the policy, however, is of course there's a cap. You'll note that the Medicare doesn't have that same kind of cap. So we don't have that item where we're going to hit the cap and no longer pay the Medicare item, although of course the Medicare rate is much lower at 1.45%, 0.0145, typically for half of the Medicare, the employee portion of the Medicare, not including the employer portion. Then we've got the California taxes. So we won't get into the California taxes. It could differ. Obviously, it will differ from state to state, location to location. Then we got the employee deductions, the 401k. So we have the same 401k, the employee portion of it. And then we have the employer taxes, including FUTA, now zero. Doesn't have anything to do with the bonus. It has to do with the fact that in the prior payroll, this employee hit that cap, which was a low cap, really low cap for FUTA, $7,000. The cap for Social Security is much higher, and therefore many employees will not hit the cap for Social Security. It's over $100,000. It goes up each year, so many employees won't hit it, but every employee will typically hit the FUTA tax and oftentimes hit it in like the first quarter, this employee hitting it in the first paycheck. And then we've got the Social Security and Medicare for the employer side matching what was up top for the employee. And then we got the company paid contributions, including the 401k employer kind of matching side of that 401k. So we are then going to say okay down at the bottom. Everything looks good. We're in February. That's what we want. We are going to preview the payroll check. Looks good. We're going to submit the payroll. I have no idea what the check number is going to be right now, so we'll note that QuickBooks is telling us that we have this huge bonus amount and we're going to have to pay the taxes generally faster when that's the case. So that's nice. QuickBooks has given us a warning on that. I'm going to say that the check number is going to be 1011. And we're going to take a look at the pay stub. So here's going to be the pay stub calculation. We've got, remember, the S Corporation Owner's Health up here because it's kind of considered in gross pay, but it's not part of the paycheck calculation. So it's kind of in a separate item. Then we've got the net pay, $113,164.26. And then we're going to scroll down and see the summary. We've got this huge $241,666.67 compared to our prior paychecks that we've looked at, the taxes being pulled out, and the deductions giving us the net pay of $113,164.23. The taxes then being on the left, where we've got the $82,954 federal income tax, the Social Security, the Medicare, and then the California taxes. And then the deductions up top, which include the 401k plan. The total pay then, of course, is over here where we have the standard pay of the salary. And then, of course, that bonus that we added at this time, at this paycheck during this pay period. I'm going to close this back out and just take a look at that on the register by going to the going to accounting down at the bottom. And then we're in the chart of accounts. Let's view the register just to see where that check lands. And it's going to be a check in February. So we're looking for a check in February, and we're looking for Judy Jones. Here is the Judy Jones check in January. Here's Judy Jones in February. So there's the check. If we want to see the detail on it, we can select that, edit that, and that takes us back to the payroll item for the detailed information. For more accounting information and accounting courses, visit our website at accountinginstruction.info.